Hey, this will be a video chart on CBIS. Did this one a couple of times. Not quite sure when the last time it was, but today was pretty brutal. And my guess would be it had to do with the proposal out in California being denied. But I still got a lot of questions on it from a technical perspective, and even from a trader standpoint. Now, there could be a potential play here, so that's what I want to go over. Update everybody on the daily chart, and that way everybody's kind of got a few different angle points from it. So to start off just with from the daily chart, if you remember these lines that I drew on previous videos, this was the must hold level. Obviously that one didn't hold up, but what that now becomes is a must hold level to get back above if this is going to have any chance at remaining bullish. Believe it or not, it does still have a bullish flavor to it, bullish edge, and I'll explain what I mean by that. Now, sure, if you're a day trader and you bought up here or here or here, yeah, you're probably calling me crazy right now. But from the daily chart, and any chartist would agree with me, it does still have a slight little bullish edge to it. And like I said, I'll get to that in a few minutes here. But these lines up here, I'm just going to get rid of them because yes, they were resistances, but for the time being, we won't worry about those. But the key level of resistance on the daily chart now is going to be back up here at 0.1313 cents. If you remember, like I said, this was a key area of support. It's failed. Now it has become resistance again. Now, for the people that are hearing me say, how can you say this chart still has any sort of bullish edge to it? Well, if we look down here at this purple line, which is the 50-day simple moving average, if you're familiar with technical analysis, you know that the two key kind of godfather moving averages, whatever you want to call them, are going to be the 50-day and the 200-day. And the 50-day got tested today, and it held strong, and the price is still above it. So potentially, I'm not saying this is a fact, but maybe this has been a capitulation day. The people that freaked out and caused a gap down, they're out. You can see a big thing of volume. Got a nice doji, hammer candle, whatever you want to call it, and it occurred right here at this key level of support. So all that stuff is bullish. Not the price, not the gap down, obviously that's bearish, but everything that happened after the gap down was bullish. Once again, meaning you got a good candle on the day, it all occurred, and the price remained above this 50-day simple moving average, and you got big volume. Meaning, sure, there were a lot of people selling after the gap down, but there was also people that were absorbing it and buying. And whether or not that's a smart decision, I don't know, but it does show that potentially we could have a bounce play here. And that's now where the bottom feeders, the chart players, and just the day traders, this is a very good risk versus reward. You can limit your risk by quite a bit, setting and honoring a tight stop loss. So just for example's sake, let's say you want to set your stop loss somewhere down here below the 50-day. This would be your risk right here, that little small box. And let's say you got in and it ended up going back up there, not breaking, but just retesting this level of resistance here. You can see that the risk, this small little box, compared to the reward, this big box, clearly outweighs it. So you could lose quite a few of these, and imagine how many squares you could fit into this bigger one, just showing that, out of these you could technically, lose 3 out of 5, but yet the ones you would win, you could still come out green. So from that perspective, it is a good risk versus reward. Like I said, this could have a nice major bounce to it, or this might just start to fade along and then drop back off. But when you see charts like this, where you have big volume, a nice candle occurring around a very important moving average, it's worth at least throwing on the radar. Once again, I'm not saying that it's for sure going to bounce, but it definitely could, especially after these. So it's worth at least watching and seeing what transpires the rest of this week. So if there are any other questions on the chart, please let me know. If not, I'd encourage you to check out bullwarriorstocks.com. If you go there and sign up for the free newsletter, you'll be sent a free ebook, and with your newsletter subscription, you'll get chart setups, trade ideas, educational pieces, all sorts of things from big boards down to penny stocks. So there's a good variety, something for everybody. It is all free. We've been making some good money together on our alerts, so I'd encourage you to head to the website, sign up, and give it a try. One more time, this was CBIS. Thanks for listening.